Hi folks, it's Hayden CryptoBirb speaking. Welcome to today's Friday overview video of the Bitcoin technical analysis for the spot price chart on Bitstamp exchange. Well, there's been a lot going on, especially so much excitement, so much buzz, so much uncertainty and volatility lately as we, got the first bunch of approvals from the SEC for the Bitcoin spot ETFs that basically exceeded everybody's expectations, and it broke the record in terms of the anticipation around the ETFs, recording all-time high volume of multiple billions of dollars, beating the gold ETFs by I think 100% or so in terms of their interest. So this has been recorded as the biggest asset interest in history for Bitcoin, which is pretty incredible record, and that translates to a lot of prices, right? Movements, a lot of price movements, because at the end of the day, the technical analysis, technical toolkit is a set of tools, as a toolkit to manage the risk, to quantify the risk using the techniques based on the volume, price, action, momentum, as well as the volatility, breadth conditions, and so on, right? So it's not supposed to give you the future. It's not supposed to tell you the future, to forecast. It's supposed to give you the credible analysis over the current trends and the market conditions, right? So let's take a look. This is a daily chart. What we're looking at basically is, first of all, the rising tide ever since 2023 started, right? So 2023, ever since this FTX collapse, on the beginning of November, it got us basically in this excellent position for the bottoming reversal pattern that got sliced and kind of like confirmed on the first days of 2023, January, a year ago, right? So it's been a year since Bitcoin basically started trading, above the 200-day moving average, breaking the 19,500s that was at the time for the zone of interest, and that put us basically in this incredible good position, from the market perspective, because that gives us the first massive purge and massive pursuit. I wanted to say massive pursuit of the bulls, right? This is a massive run that basically took us from the 15,500s all the way to $49,000 in some exchanges, including Bybit, for instance. Shout out to Bybit; they are our official partners, by the way. So having seen this magnificent growth all the way from 15,500 to $49,000, this is basically us confirming of the total growth from the 15,500 all the way to 49K, basically of 216% return, right? So it 2x'd, more than 2x, basically since the actual bottoming process right there. It's an incredible rally, powerful rally. And the buy and hold traders basically not adjusting for the volatility, did pretty well, because the volatility is super high, especially lately. Speaking of the volatility, we're talking about the record high 18-month high volatility record, right? Because the last time the volatility was this high was basically, if you gonna kind of try to project it, it was in June 2022. Okay, so there's an 18-month record in terms of the volatility. And that happens, drum roll, guess, surprise, every 18 months. So this takes a lot of time to process and to for such conditions to appear, right? And ever since we actually broke outside of this 25, 32K rectangle, that lasted for about 6 months, we got this massive spike on momentum as well, right? Which was seen as this massive breakout up here, right? So the volatility confirmation came in that the trend started basically raging to the upside. The volume started getting a little bit more elevated. I would imagine that even if we want to run some moving average, we would see some inclined moving average overall presence, right? So the 20-day moving average is actually inclining, just like you can tell, right? It's not a gigantic incline, however, it's rising, right? The average 20-day average over the last 20 days it's rising. This tells you that there's bigger transaction count, more transactions closed, more trades closed, more liquidations, more hands exchanged, for the Bitcoins, basically. So long story short, we get to see this massive, powerful rally all the way since the 32K breakout, all the way to 49K, especially including the latest volatility spikes around the ETF anticipation, right? This is the time that from the start of the year, we're starting getting this narrative of inclined volatility, driven by the anticipation of the ETFs. And the ETFs came through, right? Like I said, with the inclined volume spikes, general incline of the volume. The momentum is stalling, right? The momentum is stalling, and somewhat on the X platform notice that there is some rising, I should say, emerging bearish divergence, right, between the price action and the actual momentum, which makes a lot of sense, right? So eventually, what we know is that, well, we don't know the future at times when the market trends and finally moves in some sort of like a sideways and it breaks out. Eventually, well, the move expires and gets exhausted, right? And it reverses and it has some sort of like pullbacks and throwbacks. However, until that really happens in such powerful trends on rising volatility, as long as the volatility is rising, I would be extremely cautious, right? With trying to project the tops and the bottoms, just maybe this $50,000 milestone, this beautiful round number, and we love those beautiful round numbers. We have some special magical thinking around them, that they have some special significance and meaning, which, as a matter of fact, is false, right? Because $50,000 is just the normal number, just like 45.77.8, just the current price action level, right? So it doesn't really matter. However, we have this special treatment for those round numbers. So just maybe this magical thinking is going to basically make us as the collective of traders place some resting orders, some stop orders, and some limit orders for the sells, for the asks, eventually to kind of like give us a little bit of the loss aversion driven resistance, right? Because as a matter of fact, the trend is up, it's rising, it continues to make higher highs, higher lows, right? The first low, the first high, some sideways. The third wave right now keeps going. So there's an incredible amount of bullish trend in the trend, and the trend is accelerating, and the volatility tells you that. So it's just not my opinion. I'm not giving you my opinions. I'm giving you the facts. The volatility is rising, right? The volatility tells you that the aggression of the buyers in the direction is rising. The 200-day moving average is accelerating as well, right? This is quite a powerful accelerated strength movement, right? So even though there is a little bit of the bearish divergence, if you will, which is truly rightly pointed, some of those moves, can last for weeks or months, and the markets, especially in strong, powerful trends, can remain overbought or oversold for weeks or months. So just the fact that there is a divergence lining, it doesn't really matter. It doesn't really guarantee an immediate reversal. It may happen that eventually the move is going to expire, like get some overshot, top, and then get some local slowdown. However, just like we know from the past, right? Again, I have no idea what's going to happen in the future. I can only tell what's happened in the past, and all I know is that the halving coming up in April, basically in April, the mid-April, somewhere over here, typically takes us to the new all-time highs. Always took us to the new all-time highs and never came back to the same halving prices, right? So whatever happens in here, maybe it's going to chop in sideways, maybe it's going to be some corrective tide. Whatever happens, the history teaches us that it always brought massive rallies and powerful monstrous waves to the upside, right? So that's not something to probably to counter trade. So like I said, the local reversal is possible, right? You never know what's the next move. Maybe there's going to be some news that's basically going to trigger a lot of sells. We don't know that. However, what we know is that there is massive rising trend. The 200-day moving average bull market trend accelerates. The momentum is stalling. The volatility is rising. The volume is rising. So if I were to place my guesses, I would say that there is still some steam left in this Bitcoin. Maybe this 50K is going to act as this opposing force placement and resistance. Who knows? Maybe it's going to overshot it just a little bit. However, whatever happens in the next couple of weeks and months typically takes us to the halving, right? Which every 210,000 blocks, the Bitcoin halving rewards are halved, basically, right? So the mining scarcity, the mining production costs increase, the digital scarcity increases, right? So that typically drives the value higher because there's less of it. When there's less of it in circulation or it's harder to get, basically we wanted more, right? So that's the reality. So again, the volatility is supporting the bull market trend. The divergence is kind of like hanging out there. Eventually it's going to get triggered, and eventually is going to bring some reversal. If the reversal comes right now, we don't know that yet. So follow the trend. Overall, the trend is to the upside. And as long as trend is to the upside, our directions and our eyes should be looking up. And that's the message for today. Hope you enjoyed this short overview. Leave a follow on our account. And God bless you all. See you around.